All right, guys, well, let's get cracking. Okay, so what we've seen today in the markets already, ECB have come out with unchanged rate decisions to be expected. I've written a piece on FX Street, actually, that maybe the Bank of England are going to cut rates. The Bank of England obviously are going to stay easy on rates, but the ECB have got some room to manoeuvre on rates. But let's just see what happens. I mean, that's all gone now. That's priced into the markets. Okay, so what we've got now is we've got 20 minutes until initial jobless. So, as figures go in the market, it's something to definitely keep an eye on. It's not really my favourite figure, to be honest, but it's something to bear in mind. I mean, we've seen a bit of a downward trend in the initial jobless over the last kind of 6 months. There's been less and less people claiming, so it's a bit of a backwards figure today, and obviously a higher figure is bad for the economy. So the more people that are applying for the initial jobless and for the insurance claims, that's worse for the economy because there's more people not paying into the system and more people taking out. So a higher figure today is going to be negative for the S&P. So something to bear in mind when we're trading these particular types of figures. We've got a figure expected today at 355. Low of the range at 335 and high of the range at 362. So a pretty tight range today. I'm not really expecting a massive reaction to this figure, but again, we're seeing the S&P just taking a little bit of a bearish move at the minute because of the back of the ECB keeping the rates unchanged. And again, I still see the S&P massively out of value at the minute. It really is a lot higher than I expected it to be. But again, we can't control the markets. We can only control the data of what we trade and how we interpret it. So again, we're going to see I'm going to trade the S&P on the back of this figure. I'm not really expecting, like I said, to be majorly out of line. But what we can do is we've got half an hour after the figure's been released. What I can do is I can talk you through the markets and see where natural points of support and resistance could be, where the market could move to. So let's just take a quick look at the S&P now. So what we've seen is the market has again increased to move higher. We've seen these highs made up here at 1544.5 in the S&P. The market's really tested that twice and then started to move down. What we've got here is a Fibonacci retracement, and this Fibonacci retracement is drawn on because what happened is this candle here on the hourlies traded outside of the upper end of the Bollinger Band. We then made a higher high. Okay, so realistically, what generally happens after that scenario is the market then sells off. So the market did actually pop through this high here in the fourth hourly candle. But time and time again, as I keep saying, 80% of the time, an extreme or an overextended move will retrace to 50%. So we see the market actually touches the 50% level down here at 153620 twice. So if you're going to get short any time after the market trades back in to that key level of 1541.00, the overall Fibonacci break, then you've got two opportunities to get short to the market, knowing that the market generally is going to hit the 50% retracement mark. So, okay, so Mr. C is asking, why was your fib right there, only two candles? Okay, well, like I said, I mean, this candle here, okay, the one that the big green one is the end of an extended move. So, okay, when we close outside the Bollinger Band and then the next candle prints a higher high, then that's where you do your retracement signal from. So that then tells you that the market is likely, before it continues to move upwards, is going to test around about the 50% mark, which it does twice, then at 1536.25, and then moves higher back to these highs that it made at 1544.5. Then the market kind of moves down, tries to kind of hit the new highs again and can't. It moves in a sideways movement. So really in the S&P, we're right between two schools of thought. I mean, you can't really see the market from this point wanting to push much further because it's rejected these highs almost 4 times. Okay, so for me, what I'd like to see is the market not make a higher high from this point, close below 1541, hit down here at 1536.25, and then retest all these Fibonacci levels. Okay, retest 100%. This key daily level here at 1529.75, then all the way down to these really good levels of support that tie in at 261.8% of 15113. So if we kind of look at what the S&P is trading now, these lines, remember, that are drawn in are weekly, daily and monthly points of interest. So we're looking at the higher time frame stuff. So we could look down on your 15 minutes, your 5-minute candles and see what's happening right now. But the larger part of what we're looking at right now is the S&P is pretty flat. Okay, it's moving above this 50% retracement mark at 1536.25, but below the overall resistance at 1544.5. Okay, so we're in a bit of a sideways movement. So really, it's up to you how you view the markets. The market's either going to move down and test the 50% and break it, then you've got all these levels in play like 152959, and then all the way down until 148175. Or you're going to see the market continues this up move. It's going to have to break and test 1544.5, but then there's no resistance in the market until these two key levels up here at 1565.75 and 1586.5. Okay, so how you're building up your view of the S&P right now, it's in a tight range. So you've got quite a nice option to go long or go short here. I would be, personally, I still think the S&P is overbought. However, all this year, what we've seen is the market, every time the S&P has been sold off, we get a piece of good data, the market then continues to push higher, and people are buying dips in the S&P. So that's either come to an end and that's not going to happen, or we're going to continue to buy dips. Okay? So, again, that's entirely up to you guys how you view the market. We're in a tight range, and I think a break of the 50% or the 1554.5 point of resistance is going to see a continued up or down move. So again, guys, that's down to you to decide what's going to happen. Maybe if the initial jobless today, right now, in the next 15 minutes is severely out of line, maybe we'll see the market push. Okay, so Mr. C, you're new to me, Mr. C. I've not seen you before, but we would put our fib 3 candles before that dragonfly. I would also draw a fib that way, Mr. C, Forex Gal. Okay, well, I mean, that's the whole point about technical studies. That's the whole way about drawing Fibonacci lines and saying it. It's not to say I know more than you guys, okay? I do. It's as simple as that. I've been charting for longer. I've been doing more stuff. I just do more things, okay? These charts and the way they are not meant to be an oracle. They're not meant to be the only way you can trade it. If you want to trade a Fibonacci in a different way, what you would do is you would just find your Fibonacci tool, as we normally do, and then start it from the up move. So you start from the up move here, you see nothing but green candles, you know, even do it to the high here. Okay, and that's going to give you more targets. So you're going to get targets of the overall move here, which is the low to the high, and your 50% is going to be here. Okay, so your 50% on your chart of the overall move is going to be here. Okay, a 1258.38. What I've done, okay, and why that Fibonacci line is drawn in, okay, here, is because in this part of the trading scenario here, we've come up against two different scenarios. The first one is we're trading above the moving average. The second one is we break the upper end of the 20-day Bollinger Band. Okay, once we do that and make a higher high, this is three simultaneous things happening within the markets, and only on the H1 view. What that means is that the market is doing three things that I recognize that are going to lead to a retracement. Okay, and that's why that Fibonacci line is drawn in here. Okay, because it's based upon these two candles here. Yeah, this first one is breaking higher. It's above the moving average for a start. It's breaking the Bollinger Band, which you can't see, so I've not overlaid it. This is an automatic indicator. And then this next candle here has made a higher high. Therefore, this particular scenario draws in. And until it closes above the Bollinger Band, okay, and makes a higher high, the Fibonacci won't automatically draw in. So if the market then breaks up higher here, towards the end of the chart, this will go away and it will tell me a new signal. So really what this signal here tells me is that, okay, the market pushes up from here to here, so, 15 pips, but then breaks down to here, okay, and makes 46 pips. So that's a 3-to-1 trade automatically drawn in for me, taking on very little risk, okay. Market pushes higher, but doesn't close above this level here at 1541, and then red candle, doji, but then hits the 50%. So I'd make 3 times my profit by drawing the Fibonacci in that on a short H1 trade. If you want to draw your Fibonacci's on the whole movement, okay, or from the low to the high, you're going to get a different trade out of that. You're going to have to hold on longer. But I've been able to make that trade and make my profit in 3 hours based upon them 3 things. Closing above the moving average, breaking above the Bollinger Band, and then making a fib from the start of the break to the end of the break. Okay? That's why that Fibonacci is drawn in there. So we can take that off. We can completely discount it. We don't have to look at that. Again, if you want to look at that in a different view, then this is the way I set up my charts. This is where I trade everything. You have your 5 minutes for volatility. You have your higher time frames here. You have your 15 minutes in your hourlies, as I always say. Okay, trade your 15 minutes with an hourly view. Then you've got your monthly, weekly, and daily points of interest. So you can see there's no real levels drawn in the S&P right now. Okay, and the hourlies, okay, we're trading inside the Bollinger Bands. Okay, we've tried to break the upper end of the Bollinger Band and this high end of resistance at 1544.50 and can't. So we've rejected that in the Bollinger Band. We're now trading just above the moving average. Okay, down here where the market is currently. We've not tested the lower end of the Bollinger Band, not got anywhere near it, and our only other key level of support the market could test to is 1529.75. Okay, so what's that telling us? Well, that's telling me that if we close above the moving average, yeah, then the market could then creep up and test these highs. If we close below the moving average, we're going to instantly try and target the low end of support, okay, and the support is going to come in at the low end of these candles here. So we're going to see support come into the market here at 1537.91. If it doesn't do that, it's going to look to break and extend the Bollinger Bands, hit these lows here, and then it has to target 1529.75. Okay, so the 5 minute, the 15 minutes telling us nothing. Okay, the monthly is telling us we broke above a monthly key level, but we're towards the up end of the Bollinger Band. Okay, that's the same level here shown on the weeklies. The key levels are down here, okay, on the higher time frames, so you need to be buying right down here. But again, you can see green candle, all these are green candles, a doji, market tries to push down and rejects it, and again, eyes that 1529.75 level and breaks higher. But look, on the daily, weekly, and monthly, we're towards the Bollinger Band, the upper end of volatility. What we see on the daily is we break through it, we make a higher high, but then the next candle, okay, almost forms a doji as it's forming now, but then can't break the upper end of the Bollinger Band. So that for me is saying the market's going to move sideways and down. Okay, we've tried to stay out of the volatility and break above the upper end of the Bollinger Band on the monthly, the weekly, but on the daily we're back inside value. So for me, the only way is down now. So we close inside this Bollinger Band here at 154269, or we close below the moving average at 1539.70. Yeah, we're going to see down movement, and the market's going to look to test 1529.75. It can't do anything else than that. Okay, there are no other key levels. Okay, the other key level is not until we hit 1507.00 on the downside, and if the market is going to break up, which I don't think it is, but it could do, it's going to hit 1565.75. So really, you know, we've got a lot of movement, or okay, a lot of scope for the market to push higher aggressively or push lower aggressively. And these fundamental figures that are coming out now could be a factor of that. So if we see initial jobless about maybe 380, 400,000, then that's going to send the S&P testing the low end of the Bollinger Band, okay, and the low end of this level of support at 1529.75. Okay, so that's what's going to happen. It can't do anything else. So really, what we're trying to look today is tie in, you know, all the technical factors that we're looking. Use things like Bollinger Band, use Fibonacci. But the whole point of technical studies, which I keep telling you, and all my different trading clinics, my live trading strategies. Remember, in all these trading clinics, guys, I've put a trade on. So I'm 5 winning trades out of 5. So it's only small money. I'm up £545 in 5 trades. But that's still real money, out of the market. And it's just based upon showing you the charts with these time frame setups and showing you things like Fibonacci, Bollinger Bands, moving average, working in harmony. I mean, this isn't rocket science, guys. This is stuff I learned a decade ago. Okay? And these are things that people really in the markets are still using. You always know an unexperienced trader when they start talking about looking for other things that people aren't. Okay? Looking at weird 56-day moving averages, looking at things like Ichimokutu, looking at things like point and figure. These are things that people don't use. If they don't use, they don't become self-fulfilling. Everybody uses a moving average. everybody uses candle. The majority of people look at MACD and RSI. So if you're looking at all these things, you know what people are doing. Therefore, you can trade with them, or you can trade for them, against them. Okay, that's how you trade. It's not knowing what other people don't. It's knowing what everyone else does, and then trading with or against them. That's how you trade. So when I say you need to have the 15-minute charts up and your hourly views up, you do. Because people trading go 15 minutes will get squeezed out of trades because they're not waiting for hourly closes. They're not patient enough. So all these things can happen in the 15-minute charts. This, and this. But it only looks like that on the hourly. And if you're not looking at this, you're getting too much noise and too much signals for the 15 minutes. That's why I say look at your hourlies, okay, for them to close. Because you can get less manipulation in an hourly candle than you can in 15 minutes. So build it up in the right way. 5-minute volatility, 15-minute possible entry, hourly signal. Okay? So if you'd have bought anywhere above 1529.75 and only looking at the dailies, you wouldn't have got out because you haven't made a lower low and you've just continually made highs. You're in the uptrend. But if you're looking at the hourlies, you have to take all this noise on board. If you're looking at the 15 minutes, you're taking even more time on board. And you're taking too many signals. Okay? So what you've got to do is understand that it doesn't matter what product you're trading. Okay, you could be trading pork bellies, forex, indices, it's all irrelevant. If you look at the candles and how they form on the different time frames, they're only doing the same thing. A 15-minute candle is just 4, okay, displayed as one of these 4 times. That's all that candle is, just these last 4, you know, piece of data. You know, there's no mystics to this, guys. Okay, everyone's got access to the same data. I'm trading on MetaTrader, okay? So everybody has absolute access to just this data. I just present it in a different way because that's how I understand it. I understand volatility, I understand time frames. So if you look what's happening in the big picture, your top left on the monthly, you can start to drill down and see green, green, green. Okay, we'll wait for the market to hit low on the hourlies and then buy it because that's what people want to do. So that's what it is. It's just noise in the markets. Okay? So, alright guys, well listen, we've got 3 minutes before this figure's released. I'm not saying it's going to be out of line. I'm not going to say it's going to move the market. But let's have a look. Okay? I'll be trading my live account as always, guys. I'll be trading the S&P. So what I'll do, I've got my, you can't see it, but I've got my account open here. You know, I'll just prove this to you. I'll just bring it back onto the screen. So I've got my account here. £8,000 of money I've made. Okay, so we're going to buy or sell 3 lots, depending on what the figure is going to be today. So I'm just going to take that away. I'll be looking at the S&P charts. I'll be going through that. So then ask me any questions. Okay, so we know the figures expected 355. We know that the top end of the range is 362, and we know the low end of the range is 535. So again, remember, a high figure today is bad. More people claiming, less people putting in. So it's a high sell on the S&P. So I'll put my squawk on now, guys, so I can hear the figure coming out. 90 seconds till the figure's coming out. I'll do a call if I think it's positive, buy for the S&P. If it's negative, I'm going to sell. I'm only looking at the S&P now. I'm not looking at any of the markets. Okay? But remember, if it's positive, as in the low figure, the S&P is going to go up. If it's higher, that is negative, the S&P is going to come down. So you should be able to know how the S&P affects any market you trade. So if you're trading currency, if you're trading the euro dollar, you should understand what happens. Yeah, in the euro dollar instance, if this is a high figure, that's bad for the dollar, so the euro should go up against the dollar. That's how we look. Okay, so remember, good news, bad news principles, guys. Okay, guys, we've got about a minute before this released. It'll be buy, or sell for the S&P. It's not an indication to buy or sell. This is just what I'll be doing. Figures expected at 355, and I'll buy or sell depending if it's out of line. So remember, high is bad, guys. High figure, bad. S&P should come down. Okay, so we've got about 35 seconds. Remember, 355, high sell, low buy. 10 seconds, 355. 340,000, so lower than expected. Could see a slight bid in the stocks. Okay, so 15,000 less than expected. We have the trade balance in at the same time. Okay, so really got Canadian trade balance come in at 0.24. Okay, so the Canadian trade balance figures coming at the same time, not really affecting the market. We've seen the initial jobless expected 355 coming at 340. So there's 15,000 people on a monthly basis claiming, less people claiming. So that's good. That's better for the US economy. So the US economy is going to get stronger. We know that we're buying into dips. So let's look for some entry points. Okay, guys? Let's look where the market could get into. We can see here on the 5 minutes we're trading above the moving average. So we've got our target still set in stone at 1544 spot 50. You know, there's nothing else on our charts drawn in to tell me that, you know, the market wants to test. Okay, there's no logical other time frames or points of interest on a daily, weekly, or monthly that are looking to go. So initially we're going to hit the top end of the Bollinger Band. So if the Bollinger Band is broken, the top end, again, we're way above the 20-day moving average. So the market's going to test, you know, the top of this Bollinger Band here at 154293, and it's going to look to test 1544 spot 50. There's nothing else that the market's looking to test. If we don't break, you know, and the market doesn't take this news as positively as it should. So remember, you know, we've still got 340,000 people claiming unemployment insurance and benefits. So it's not like it's a small figure, okay? So if it's going to be a real kind of bid to the market and make the market go up a lot higher, it'd have to break that 535 low end that was expected, okay? Okay, Forrest Gold is asking, since Draghi is talking, aren't we really going to be trading or watching the ECB says? Well, absolutely. But, I mean, again, this is a US figure, Forrest Gold. So that's a big US figure that's going to affect the S&P. Absolutely. But we can quite easily, I mean, that's the beauty. I mean, if you want to trade the Euro stocks, that's the beauty of my setup here, guys. There we go. Trading the Euro stocks. Pretty much mirrors what's been happening in the S&P over the last month. But again, we're a little bit lower in fair value on the Euro stocks because we're trading just below the moving average here on the hourlies. But again, we're rejecting the highs of the Bollinger Band on the monthlies. Okay, we're right in fair value on the weeklies. Okay, we're nowhere near the low end or the high end. We're pretty much, you know, trading above the moving average. And again, if you see in the dailies, we broke out of the Bollinger Band, but we couldn't make a higher high. So again, I'm still seeing negative, guys. I'm still seeing negative direction and negativity, short term anyway, for the market to move down from the highs. We rejected the highs on the monthly. We're nowhere near the highs on the weekly, and we've rejected to make a higher high on the dailies. Okay, so we've got key levels of interest in the Euro stocks here, 2692 and 2699. So if we trade below them, the market, like the Euro stocks, for instance, is going to look to hit 2670. So we'll keep the squawk on, guys. As Forrest Gold rightly said, you know, we can keep that in the background, and if Mario Draghi says something, then we can get on the back of it. Now remember, I mean, Mario Draghi is a very experienced speaker, so these people are not going to move the markets. These people speak in code, just like Jean-Claude Trichet 5 or 6 years ago that spoke about price stability. You know, we don't have price stability anymore because we're not looking at interest rates. We're looking at growth. Okay, so that's all the market is interested in right now. We're not looking at inflation stress or pressure. We're looking for growth. Okay, so we're looking at GDP, we're looking at sentiment figures, we're looking at things that are good. That's why I focused on the initial jobless today, because that can bring good news to the economy. Okay, 340, 15,000 people less are claiming insurance, taking that money out of the economy. That's a good thing. Okay, so what we're seeing right now, we're seeing a little bit of a bid in the stocks. As I said, in the levels have been hit already in 2692. So the next point of these that the market will look to test is 2699 in the Euro stocks. Okay, so we've got some comments coming through from Draghi, so we're going to have to be careful and listen to these. Okay, so again, if you've got your squawks on, guys, you should be listening to these comments that are coming through. Okay, we've seen the euro-dollar hitting session highs on the back of some this jobless figures. Again, remember, guys, you've got to let this data filter through. This is good news. Okay, it's not great news, but it's good news. Okay, so you're not going to see an initial spike in the markets like you will do with non-farm payrolls. You've got to be a bit more patient. So again, if you're trading the European market, why is it moving up? Is this because of Draghi's comments, or is it because initial jobless has come in at 340, 15,000 better than expected? Okay, you have to understand what people... I'm just showing you my setup on the data that I'm looking at for the years that I've been in the market. This is just force of habit. I can't look at anything else because it just isn't worth it. It doesn't work. Okay, Draghi is coming out with positive comments all the time. He's saying that the markets are going to stabilise and the economy is going to get stronger for the second part of this year. All these comments are good. All these comments are going to push things like the Euro stocks up. I mean, do you want to look at the DAX? Okay, simple as that. Okay, so we've got the DAX, all the same setup, guys. 5, 15 hourly, monthly, below the Bollinger Band, weekly, big green candle below the Bollinger Band. Okay, we're trading way above the Bollinger Band on the dailies. So again, still seems to me that by the end of the day, we're going to see some slip off in all these markets. But right now, green, green, green. Okay, green, green, green. The market's pushing higher. Okay. So again, guys, if you're looking for key levels of support and resistance in the DAX, we've got key support coming in at 7882.0. We've got a key level of resistance of 7976.0. And if the market breaks that on the top end of the Bollinger Band, in the short term, the DAX has to look to test 8136.0. Okay, no real resistance or key resistance on the higher time frames, down to 7623 in a DAX. So again, we're right in the middle of the range here. Look how close the Bollinger Bands are together. Economic look on the downside from Draghi there. So again, we could see the market sell off. So this is why it's so difficult. And again, Forex guy, you're exactly right. We can listen to these comments coming out of Draghi and the ECB, but they're so difficult to trade. The thing is, what I would like to do is let these market commentary come out and people make a decision based upon what's been said in the entirety, not just trying to trade the individual comments. Okay, you haven't got direct market access. Okay, you're trading on a spread, so it's very difficult because all these comments will come out and you'll find a lot contradict each other. So you'll say good things, good things, good things, then throw in a bad thing, then a bad thing, and it'll throw in two good things. So the market will whipsaw around, and you won't really get the full extent of what he said until he stopped making comments, and then the market then decides if this is a long-term good or a longer-term bad. And longer-term can be 5 hours, a day, a week, a month. You just don't know. Okay, some questions coming through. So he told that the inflation deadline's more than expected, so maybe he had talk about cut rates. Okay, Pavlin, I don't quite understand you there. Okay, Buki, am I an impatient trader? Okay, I'm not sure what you mean there, Pavin. And what are you talking to me, Buki? Are you saying am I? No, it's all right, Pavin. Just try and put your comment across. There's nothing right or wrong here. Don't worry. Or Ray Rise. Yeah, absolutely. I mean, again, when you hear about people like Ben Bernanke at the Fed, they never come out and say we're going to cut interest rates. We're going to raise interest rates. They have their own market speech, have their own way of interacting with the markets. They will never come out and tell you something clean cut. They can't do that. Just like when you hear comments coming from Bloomberg or Reuters, nobody puts their neck on the line, so they've always got plausible deniability. Nobody just comes out and says, yes, interest rates definitely have to come down because the country's in terminal decline and we're all going to be cavemen very soon because we're going to be skint. Nobody can come out and say that. Okay, what they have to say is like these coded messages. So when you do trade market commentary, market news, you have to be almost like a detective. You have to read between the lines and see what they're trying to do, how they're trying to coax the market traders. And remember, guys, there are people that make the money solely off trading market data. But these are the guys that have direct market access, the people sat on the trading floors, the people with the phones, the people think traders are like. Them people are few and far between, guys. Trust me. I manage the biggest trading floor in Europe at Snyder's, and we have a lot of people trading intraday, trading minute trades, 10-second trades, and making huge amounts of money. But you have to have the setup to do that. You can't do that on a spread betting platform. You can't get the size off, and you just don't have the direct market access. So yes, as Forex guy was saying, the euro's going up. So if the euro's going up, what's happening in the stocks? Well, the DAX is coming off. So the DAX is closing and trading below the moving average. So it's going to hit the low end of the Bollinger Band. So if the downward movement continues, the DAX has to hit 78820. Okay? So what else is happening? If we just look at the overview. So if you want to trade an overview, guys, and see what's happening in the markets in general, then this is the screen I use. So we can see the euro dollar is pushing higher, hitting key levels here at 130587. Okay, we've seen the S&P is up. The dollar against the yen is up. But again, conversely, other things are going down. So that's the way these screens are set up. Okay, we see the pound, euro strength against the pound. But again, look at that. A full down candle being retraced on the hourlies and hitting these Fibonacci targets. Okay, so I'd be quite happy to short the market in the euro against the pound. Okay, let's just get our measure up. So we're going to short the euro against the pound at here at 0.86804. That'd be a great level to get short at because we've tested that near enough the 100% of that body. So we could do a 50% retracement of that entire candle as our target. And I bet you it is round about 0.86643. All right, guys. So I mean, this is a lot of things. I'm talking about a lot of things simultaneously, but that's where you have to be as a trader. Okay, if you are a trader and want to look at multiple markets, multiple opportunities, then you have to have your screen set up like this. How else can you look? If you're only looking at one chart, you only get one bit of information. If you only look at one chart and one time frame, you're getting even less information. So I can see quite comfortably now what's happening. Okay, so the euro's going up. Okay, so European markets are strengthening. They're followed by a rally in the S&P. Okay, so anything like the Aussie dollar or the conversely correlated are coming off. Okay, so the US dollar against the Swiss, no safe havens. So people are getting out of safe havens because there's good news coming into the market. So there's good news coming into the market, then you look for something that's low and you buy into it. Okay, so you either look to sell into that strength, like you might do into the euro against the pound, because we've got good levels of targets here. Coincidentally, okay, we're closing below the 61.8% retracement on the euro against the pound. So you'd expect to get to 50% around about here, okay? Or it's going to continue higher. It's going to break through the 50, 38.2, and eye these highs up here. Or you're going to look to sell things, like I said, sell the Canadian against the dollar, because less people are going to be looking for the Canadian dollar as a safe haven against the actual US dollar. Okay, so that's where we pick our opportunities, guys. That's why we have all these different overviews. Okay, so if you look at the overview on the daily candles, okay, this is the daily of the euro, green, green. Okay, so we're selling off against the Swiss because that's inversely correlated. Okay, market low here at the pound against the euro dollar. So maybe we're going to see a bit of strength. Maybe we're going to hold above this level here at 1.49984. Market's going to rebound, and we've got three levels close together to a thick blue one. So there's a lot of up room against the pound against the dollar for me. So we could buy down here and look for the markets to get up here. So again, we rejected the lows of the Bollinger Bands. I mean, all these bits of information, guys, you know, you can put onto your screens and have at your fingertips. You know, I'm quite happy for, you know, to send you this setup, guys, so you can have all your screens laid out in the right way. You can look at dollar pairs, euro pairs, commodities indices, the overview, okay, or you can trade these. So if we want to trade the dollar, this is how you do it. You've got your hourly versus your 15-minute, okay? So what's this market told you? Okay, well, the market's told you in the 15 minutes we don't see any resistance in the euro against the US dollar until 133.0543. Then above that, at 1306, spot 46. Where's the market hit? Both them levels. No surprise. Okay, the euro dollar against the CAD. Okay, we're trading way above our thick blue line. Okay, again, we find support at 102.860. Market's moved up. Okay, rejected these levels of resistance here at 103.440, and it's moving down. Okay, it's trading below 103.180, another level that we've gone in. So if it rejects that, it's going to test 102.860. What else can it do? You know, this is just, all these things, guys, are based upon probability. Okay, what's happened in the past to predict what's going to happen in the future. So all this is small time frames, hour and 15, with that weekly, daily, and monthly levels overlaid. That's what's going to tell you where the market's going to go, alright? So we see that, again, the dollar and Swiss is pushing lower. Where's it going to hit? It's going to hit 0.94206. Where else can it hit? Where else can it test? There's nothing else in between it. So if you want to see that, I'm going to short the dollar versus the Swiss now, guys, okay? So I'll put my money where my mouth is. I'll trade my own money. So I think from this point, the euro, the dollar against the Swiss can only go down. Okay, let me just find that. Euro, dollar, Swiss here. Trade. Okay, so I'm short now. So I think the euro dollar versus the Swiss, based on the 15 minutes and where we're trading in relativity to the hours, it's going to hit 109.4206. Okay, so we're going to see a bit of retracement, obviously, because this hourly candle won't just do that in one clean sweep. But what I think it's going to do, it's going to move all the way down as far as it can. It's going to look to hit again at 0.94369 and then continue lower. Okay, so we're short the dollar against the Swiss now. Okay, already in profit. So I think the market's going to push down, and my target is 109.4206. Then it's going to hit 94153. Okay, so again, take a screen print now, guys, of that. Press print screen, paste it into Word, paste it into a Word document. But the market is going to test at some point in the next 3 hours of trading, in my opinion. Okay, it might bounce back up and find a bit of resistance back here at this level here, because markets won't continually go down in a straight line. They have to retrace. But if you look at the 15 minutes, okay, very small down move, rejected the highs. So for me, this market has nowhere else to test than these two levels down here. Okay, so that'll be my 6 out of 6 profitable trade if we close out for a profit in live trading clinics. And again, guys, remember, I'm talking quick. I'm throwing you a lot of data. I'm throwing you a lot of chart setups. But that's because they're already set up. So I can make snap decisions based upon what's happening in the markets right now because of these setups. Okay? And this is based upon, again, not just the data we've traded initial jobless. This is also trading small time frames versus higher time frames. Alright, guys, so we're nearly testing 0.94206 already. Okay, so we're entering off the 15 minutes. Okay, so my levels are still based on the hourlies, but they're the same points. Okay, so the market already looked to test that level on the low. Couldn't quite test it, so we're seeing a little bit of resistance. The market popping back up. The next time it tests it, it's going to break through. It's going to hit 0.4153. It can't do anything else. Maybe it'll range sideways, but again, remember on the hourlies, you've seen this big red candle. So how long realistically can that candle be? Okay, we're seeing big green, but remember, once we see red candles and we're trading off the hourly closes, we have to let this candle close. So before we can exit this trade, okay, we can only let it close on the hourly. So we've got 12 minutes before this closes. We can't get the trade until this closes. Otherwise, we're going to get forced out. No, I trade without stops in the short term because I like to average in, Bookie. And how do I calculate the thick blue lines, Mr. C? Well, they're generated off small time frame volatility. So that is based upon a 1 minute chart. Okay, so when the momentum runs out of the market on the 1 minute chart, then it draws a thick blue line on support and resistance. Okay, I've entered that trade on the 15 minute. Okay, Forex Gal. So I've entered on the 15 minute, and I'm going to get short and keep going short below 0.9439. Okay, so the market's tested lower, but we're going to have to see some pain, some retracement, because there's no way this candle is going to close, down here in one move. It can't move that direction. So we're seeing the market look to move down, look to push lower. Then we're going to see the bulls and bears fighting between 0.94206 and 0.4369. Okay, until somebody takes preference, and preferably it'll be the bears for me, and then the market will close down towards here. So the ECB discussed a rate cut, so that's why the market could be rebounding now, guys. Okay, so the market, ECB did consider a rate cut, but didn't do it. Okay, so maybe that's positive news for the market. So we're just seeing that our trade's going a little bit against us now, but based on that data. But we still know what's happened. But again, Draghi comes back straight away with a comment. They're not going to pre-commit. So again, guys, if we're going to average in, we can still average in short into this position. These comments are just moving the market based upon immediate comments. That's why it's so difficult to trade these things, guys, because you'll be trading a nice technical formation. Then the market will come in with a comment, and then it'll hit you, and then look to go short. No, I'm still going to keep short because I've still got my target. Look, we're already coming back to this level here at 0.369. So the market's looked at that and thought, well, yeah, okay, yes, that is possibly good for the economy, but the overall trend is still that we're looking to move down. We've rejected all the highs, okay, and look, long wick. So again, I'll be quite happy to keep shorting this the dollar against the Swiss up until 94621. I'm quite happy. That's when I'm only trading small size, so I can negatively average if I want to. The market for me, even off the back of these comments and the market volatility, will only retrace to here. Okay, if it traces to 0.94569, I'll get back short here. So again, you're going to see resistance here. But then you're going to see the market close on the hourly below 0.94369, and it's going to hit it down here. That's what it's going to do. Okay, I can't tell you how I know that. I just know. You just know it from trading the markets for so long. So again, if you're confident in your opinion, okay, I'm going to sell some more. So I've averaged in, I've sold some more. Okay, so we're going to let remember, you've got to let the hourly chart close because you're going in based upon your 15. Okay, but you're trading off your hourly. So your hourly signals are telling me that we're going to close down here at 0.4150. So that's what you have to do. Okay, take your hourlies, let them close, and let the market do what it needs to do. All right. Okay, guys. Well, if you're going to join in these live trading sessions in future, then come prepared with some questions. Come prepared with some products you want me to talk about, and I'll tell you where I see support and resistance. I'll tell you based on the technicals what they're going to do. Today was a little bit different because we're trading around initial jobless data. Okay, but that again wasn't a massive piece of data, but it was still a good enough piece of data to trade if it was out of line. Okay, so for me, I see short-term positivity coming out of the markets because of the better than expected jobless. Okay, the ECB came up with some comments, but nothing negative, nothing unexpected. We know growth is going to be slow. We know the ECB will have to cut interest rates and be in line with the UK. We know it. Okay, so I'm going to stay short the dollar versus the Swiss because I think the dollar is going to strengthen and continue. The market's going to continue to take a short-term bid against the market. So people will be getting out of the safe haven of the Swiss, and it's going to go down. Okay, so while stocks goes up, the Swiss will go down. I'm negatively averaged, okay, and expect the market to go down, and I will take my trade out at 0.4153. That's what I see. That's what I'm going to do. Okay, guys, we're a little bit over time at the minute. We did start a little bit slowly because of the problems with the sound. We seem to have got over that, but that's fine. Take a screen print now of that, guys, and look where all the blue lines and all the dotted lines come into play. Okay, press Control Pre now, or print screen, paste that into a Word or Paint document, and see how these lines react. These are just technical lines on higher time frames. There's nothing more complicated than that. Anybody can use this. And if you want your screen set up in MetaTrader like this, send me an email and I'll send you them. Okay? And then you can look at correlations. You can look at how to trade things. Okay? It's really, really important that you trade time frames in the correct way, guys. High time frames on short time frames. There's no other way to trade. Alright, thanks, guys. Listen, if you like that, Google Steve Ruffley. There's loads more information coming out. I'll be doing a live trading session after this, so you can find me. And again, guys, email your friends, get these numbers up, because the more people that ask questions, the more questions and market participants will see, and the more we're going to be able to trade with or against them and make money. Okay, these are new things, new ways of doing it. I'm backing it up with my own money and my own live account. Nobody else is doing this, guys. Okay, so you've got my target for the short on the euro of the dollar versus the Swiss. Okay, so you know where I'm going to get out. Alright, guys, well, thanks to Maud, Vicky, and the guys at FX Street. I'll see you all very, very soon, guys. Remember, one of these clinics every week. Again, you can come and join me for another live trading session now is time, if you can find me. If not, guys, have a great afternoon. I hope you enjoyed it. Alright, guys, thanks for that. Good afternoon.